Good day, everyone. It's Peter Kinkaide, CEO of Raintree Financial Solutions. I'm really excited to be joined today by Danny Freedman, partner at MakeSpace Capital, and John Manley, head of business development. Good morning, gentlemen.
Good morning, Peter. Hi, Peter.
Can we start off with just a little bit of background on who and what is MakeSpace Capital?
Yeah, Danny, I'll take that if you don't mind. Thanks, Peter. So MakeSpace Capital Partners is a private fund that's building a portfolio of 15 to 20 stabilized storage investments in diverse markets across Canada. And we help investors by opening a door for them to participate and benefit from this quiet and stable high growth sector of the economy. And one of our many unique features is our three distinct revenue streams, which helps grow our net operating income and support our 6% annual yield, which, by the way, is paid out to investors on a quarterly basis. So investors really benefit from the immediate cash flow of our 6% yield and the potential capital appreciation over time to support our targeted 12 to 15% annual return on exit initially in 2025.
That's great. Thanks, John. I appreciate that. So I want to sort of dive into what is probably most topical these days for many businesses, and that is COVID-19 and the impact of COVID on your business, either operationally or revenue-wise. Can you address that right off the hop?
For sure. Like, obviously, that's on everybody's mind. I could take this, John. So, first of all, like, it accelerated quickly, right? Like, COVID came on to us, and every day felt like a month, and there was lots going on. But what I was really proud of was how well our CEO Terry Thomas handled the information coming in, and really got us going in the right direction right away. Immediately, people were in separate offices, and then coming in on alternate days to the head office, so we were well prepared. We were already a little bit dispersed with home offices, so we were ready to set up for that. And then our storages, in terms of safety, obviously we implemented regulations right away, but a self-storage, you don't have a lot of the interaction anyway, so to be honest, that was relatively easy. And as far as business goes, yes, we've sort of been promoting for the last year that we're recession resistant. Self-storage in general is recession resistant, and that's proving out so far. There's nobody we haven't seen any delinquencies. We haven't seen any people running away from the storage. In fact, in the last month, we have 20 more move-ins than move-outs. So we're increasing our storages during this time. Now, this is the beginning of what might be a long thing for the economy. I believe self-storage is going to be an important factor in people's lives who need storage ongoingly. And it might be different people that are looking for storage, but there's just as much demand for storage during this time.
And that's helpful from a demand perspective. You touched a little bit on delinquencies. Can you just address that? I mean, why do you think that your customers aren't looking for deferrals or non-paying at this time when their income might be down?
For sure. And to be honest, Peter, that's when we think of what's the biggest risk to our business, that's probably the biggest one. Is okay, well, and like anyone who collects rents, it's delinquencies and deferrals. Well, first of all, we're not a bill that comes up first of the month, and people have to look at it as a big payment and assess their cash flow. And it's an automatic credit card payment that comes out during the month, and it's around the $100 mark or so. Sometimes less, sometimes more, but it's just another line on their credit card item. So it's definitely, as the pandemic started, it wasn't something that people ran to and said, I better get my self-storage bill locked down, right? The other piece is people still need their storage, their stuff's there, right? They want their stuff, and so they're going to keep paying that bill. And to be honest, at this time, we would be pretty flexible if someone can't pay during this time, and happy to defer. And that's how we see it. It's probably more of a deferral than it is a delinquency, because it's not like you're staying in a place and now that month is gone. They have been storing their stuff in that place and accumulated. So that's how we see it now. And so far, we're hypersensitive to it. We're watching that all the time. And so far we haven't had any inkling of delinquency or deferral, to be honest.
Yeah, no, that's helpful to understand. So let's talk about what's coming next. I mean, you've just updated your offering memorandum. You've got your first year under your belt. What are you excited about this coming year?
Do you want me to take that, John?
Or
do you want me to do that?
It's up to you, Danny.
You can go ahead.
Okay.
I mean, I'm excited about lots of things, but
well, as Danny alluded to, we were fortunate to have some great milestones take place through the first quarter, actually, even in this extreme environment. And coming into March, saw one of our largest capital raises year to date. We're also able to certify and qualify our mutual fund trust, which allows us to bring in retail investors and qualify for registered accounts. Also, we were able to up finance and refinance our Winnipeg property, which freed up $1.65 million in cash, dry powder for new acquisitions. And we're on track to bring in a portfolio of new investment properties from Prince George, British Columbia, into the fund in Q2. Danny, do you want to elaborate on those properties just a little bit?
Yeah, so I mean, we basically own about 60 to 70% of the storage in Makespace Inc. And now that it's stabilized, we're able to bring it into the partnerships, and the partnership will be able to participate in the ongoing revenue and the continued growth of Prince George. Again, in Prince George, we had great demand. We continue to have great demand for our storages during this time. The other thing I would say I'm excited about is just like we're in self-storage. This is a very, in the last 2 months, there's been a lot of businesses that are in a real struggle, reorganization, lots of challenges to their business. And our business, we've been able to think in terms of growth still. We're still able to think in terms of how can we get better. And to be honest, there might be opportunities during this time. With other people who might see storage as their only liquid asset, may look at us or maybe look at letting it go in this time in a way to get cash flow going. And as John said, we have some dry powder, so it's an opportunity for us.
Well, and one of your customers is business, right? And if they're having to make strategic or tactical decisions around inventory or something like that, presumably they may need different types of storage to deal with that.
Great example of that, Peter, is restaurants who now can only really put half the people in at max. And so what are they doing with the rest of the tables? They can't sell them right now. There's no restaurants buying tables. But there might be at some point. So they store it for a year. It makes a big difference then. And that's the type of, with our portable containers as well as our self-storages, we can be kind of nimble in how we deliver that service.
That's excellent. Gentlemen, I want to thank you for your time on this interview today. I really appreciate the update, and we look forward to doing business with you in the coming weeks and months. Take care, guys.
Thanks very much, Peter. Take care.